Hey, everybody. Today I am with John Antonelli. He is the CEO and president of Vantage Financial Group, located in Bluebell. They are primarily a mortgage company. So, John, hi, thanks for joining.
Yeah, thanks for having me on here. I'm excited to have this discussion with you and
Yeah.
glad to share any information you're looking for.
Well, I would first of all want to share with everybody that when my buyers ask me for mortgage contacts, you are, you know, right on top of the list. I always share a couple contacts, and you're always there. And we've done quite a lot of business together over the years. So you came top of mind when I wanted to do this small business spotlight.
Well, I appreciate that. And yeah, I think it's been over a decade since we've been working
Yeah,
together. So
yeah, yeah,
yeah, appreciate the business through the years and any
yeah.
value I can add to your database, be more than happy to.
Oh, great. Well, well, just tell us quickly, how you got yourself into this business. And, I do have some specific, mortgage questions for you. So, but let's just talk about how, you're a brokerage, which is different than a big bank or a big lender. So,
Yeah, so I started Vantage Point Mortgage back in 2008. So it's been about 12 years now. And I got into the business in '05 right out of school, out of the
mm,
University of Maryland. I went to school for finance, fell into the mortgage space. It was a good time, obviously, 2005 to 2009, but '08, '09 happened, and
hmm
ended up joining two companies that ended up failing during the economic downturn and the recession, the housing crisis. So I just decided I didn't want to deal with other banks and other companies.
hmm
So I decided out of a necessity to start my own business and rely on myself for my success. So
hmm
we are a brokerage. We work with 19 different investors, lenders,
hmm
ranging from very large banks like Quicken and United Wholesale all the way down to small community banks like Ambler Savings Bank.
hmm So, so the fact that you work with that range of lenders allows you to kind of customize, the buyer's situation to, the lender, right?
Yeah, I mean, every bank is different. So they all go through cycles where sometimes the rates are good, sometimes
Mm-hmm.
they're not as good. Sometimes they're good with certain products.
Mm-hmm.
Like some banks might be good with Fannie and Freddie and conventional loans. Other banks might be better with the government loans like FHA, USDA, and VA.
Mm-hmm.
It's nice to have that mix. We also can do renovation loans. So some of our banks specialize in the renovation piece.
Mm-hmm.
And then we also have banks, community banks that'll do new construction, lot loans, loans with LLCs as the title holder. So it allows us to have a wide range of products, and always be competitive with whatever the product is. Because sometimes banks just, especially like going through something like we are now with the
Mm-hmm.
pandemic, I mean, some banks got really, really tight with lending, which is causing a lot of people to have trouble getting approved. So some of those banks we shifted from and squeezed off using them and started working with other banks that were still somewhat aggressive when it comes to self-employment income or people with rental properties who are
Mm-hmm.
still in good shape, because there are still a lot of people that are in good shape, but a lot of the banks, or several banks, really really tighten up their guidelines, so we stopped sending them business.
Yeah, and those big banks are, they have their rules, and those are the rules, and there's no ifs, ands, or buts. And I guess you have investors that you work with that can look at individual situations, and with, I guess, with all their rules being different from one another, you can fit the buyer right into something.
Yeah, and what we notice is the biggest banks, they went and really got the tightest with their restrictions,
Mm,
in terms of what they would allow and what they wouldn't allow. Things like, somebody that's self-employed just doing 25% reduction across the board on their income. Well, that doesn't necessarily make sense, because if you're in certain fields, you might be still doing very, very well even during the pandemic. Maybe even your business
mm,
has increased. So why take a 25% across the board haircut? So we did see a lot of the big banks. I mean, they have the most leverage. They have the most to risk and lose, and shareholders and everything else. So they're the first ones that usually respond. So that's why we really like the mid-tier banks. Just because they don't respond as quickly to the crises or different changes in rates. So there's a lot of banks we have that are in that like mid-tier area that really are good during these times.
Yeah, actually, somebody asked me a question recently I thought was a real good question. Say somebody like during this time has been furloughed, or there's going to be a gap. There's going to be a 2 to 6 month gap in their employment, say because of the pandemic. Do you think is that greatly going to affect their ability?
It really does depend. Now, if somebody's a salaried employee, right? I have a casino worker that is a salaried employee. He's furloughed right now. He can't get approved right now. The day he comes back to work, because it's a salary, we can use that immediately.
Okay.
Now, there are certain things, and we don't know how things are going to change and adapt moving forward, because I think nobody really can project that. Some programs, if you have over a 6-month gap, they want you back for a certain period of time. So if it does go beyond that 6 months, it could be a problem, but I think they're going to adjust to the market, right? And adjust to what's going on. But if you have like a lot of commissions and you're mainly a commissioned employee and you take a 6 months or 4 months, that's going to impact your overall income. So there may be some additional documentation, some additional stuff from the employers that we need to state that income will continue, because if we're qualifying you based off of that, and that's going to take a big reduction, that could be something we have to account for. So it really depends on what type of income is going to dictate that.
Yeah. Well, the good news is I know you stay abreast on the changes, which I'm sure are happening, if not daily, maybe hourly.
It is, and
you'll know.
And it's sometimes a daunting task because we work with 19 different investors and all of them are changing differently. So in one way, it's a lot better because we have so many more tools than another lender could, or if you have one source, but we have to stay up with all that. So it's a lot of education. It's a lot of keeping up with the guidelines and just being aware of all these changes and what's happening with it. So, ultimately, we've done a pretty good job navigating it and just making sure that our clients are in the best positions possible moving forward, and giving them the proper advice. Because unfortunately, there are a lot of people in those situations with the furloughs and everything. So we're keeping them attuned to the situation and making them aware of what they're going to be able to do.
Well, that's good information. That's good stuff. So are you guys are busy? Are you pre-approving a lot of people right now, or?
Yeah, so the pre-approvals really kicked up the last 3 weeks, I would say. There was a period of time from I would say mid-March to mid to latter part of April that we slowed down pretty significantly. I think that was the industry as a whole. But the last 3 weeks, we've seen multiple offers on properties. We're seeing a lot of pre-qualifications coming through. The concern is that, with everything, that there'll be a shortage of inventory, which was a big issue. But if you have less sellers willing to put their house on the market, but you still have that same buyer pool, I don't think that the real estate market, that there's going to be a huge drop in prices or anything like that. I'm sure you could speak more to that as well, but
I agree. I agree with that.
I mean, we're busy. I mean, people are still looking. I mean, there's a lot of people that need to buy. They either sold their house or they just had a newborn and they need a bigger house, or they want to downsize. I mean, there's all sorts of situations where people still need to buy. And if there's less inventory, and we just, right before you jumped on this, we have a client right now that's in a multiple offer situation going over asking price, even during a pandemic. I mean, it's just how things are right now.
Yeah, well, just like in, we both lived through the downturn in 2008. People still had housing needs. They get married, they get divorced, kids get born, families change. So there's always needs.
And I think what scares people in a lot of ways is 08, 09, 2010 was the decline in real estate prices, right? The one thing I would say about that, living through it, is that there was a lot of buyers in a buyer's pool that all
Mhm.
of a sudden could no longer get approved because there were all these loans that shouldn't have allowed people to get approved. So you had
Right.
a huge pool of people that then shrunk by 30%. So supply and demand tells you that property values are going to go down.
Mhm.
That's different than what's going on right now, right? And
Yeah.
there's a shortage of inventory, even though there are unfortunately people that are laid off and people that maybe can't buy homes. So it is shrinking that buyer pool a little bit. But if there's less homes on the market, I
Mhm.
don't think we're going to see that same seesaw where you're going to see prices drop 10, 15%. I just
Yeah.
don't see that based on today. Now, I can't
Right.
project like how things are going to look if there's a second wave and different things like that. But
Mhm.
ultimately, right now, there's more buyers than there are houses on the market, which
Yeah.
tells you that prices are probably going to continue to go up for the near future.
Yeah. Yeah. I'm seeing the same thing, so I agree with that. Yeah. So we're gonna stay busy, and is there anything else you wanted to add?
Well, the only other thing I wanted to add is the other, whenever there's economic uncertainty like there is, I mean, interest rates have fallen to all-time lows. 30-year money is in the low 3% range,
Mm-hmm.
15-year in the twos. So, we've been also refinancing quite a few people,
Yeah.
lowering their payments, putting them in a better situation, especially for some people who maybe had a little bit of a reduction of income or a spouse that got
Mm-hmm.
furloughed. To be able to save a couple $100 a month could be
Yeah.
very beneficial at this time as well.
Yeah. Yeah. So if folks are interested in a pre-approval or shopping for a mortgage or refinancing, what's the best way to contact you?
So you could call me on my cell phone. I mean, I give out my cell phone. It's just like you, right? So
I
it's
know it. I'll give it out as well.
it's
Or
610-639-6304. We also have a online application that you can complete at any point in time. It's john.flowify.com. So I'll share that information with you as well. But that's
okay.
John with an H dot FLOIFY.com.
Okay.
And you can complete an application, and within 24 hours, we'll tell you where you can stand and what we can do for you.
Yeah. And what's your website address?
It's vpmortgage.com. So
Good.
again, VP is in Vantage Point
Mhm.
Mortgage.com.
Yeah. Good. Well, John, thanks so much. That's a lot of good information. People need it, and thanks for sharing.
My pleasure, and thanks for having me on and being able to share some information about our
Yeah.
space.
Yep. You're welcome. So take care. Have a good day.
All right, thanks. You too, Barb.
Bye.